Well, good morning. It's Monday, February 5th. I want to bring you the latest data here in the Austin metro area. Breaking news, the market is seeing a huge increase in buyer activity. We're seeing more demand come back to the market, but with a very big caveat, it is not going to be felt by all the sellers evenly. It's going to impact some and not necessarily impact others. I also think we're setting up two different markets in Austin right now, one for kind of new listings in good locations, and also we have the kind of 2023 inventory that's still on the market. I think buyers are still going to have a more favorable experience negotiating with those properties for now. But let me go through all the data. We're going to talk about mortgage rates. I'm going to show you where we are in terms of inventory and trends in the market. I'm also going to share with you some conflicting headlines that I think are really going to confuse the market, at least for the next 1 or 2 months, until we start to get more 2024 data closed so that buyers and sellers can both see how the market is trending. All right, so let's start with active versus sold listings. This is as of this morning in the Austin Board of Realtors. So right now we're sitting at the lowest point of houses for sale on the market that we've had in about 14, maybe even 24 months. Just a little below where we were February last year, but it was a little slower last year. But now we're seeing inventory actually still come down. I think it might round and start to climb in March. But for now, there's less to look at as buyer demand is going up. This is closed sales in January, which is really more reflective of buyers that wrote contracts in December. Typically, January is our slowest month for closings because not a lot of people buy a home in December. And also December was a slow month for sales. We didn't have as much of that pickup, but things are really changing as we switch into January. We are not going to see it in the sales data. You know, the January sales are going to close in February, and then they're going to get reported on in March. So we're still a month away before we even know kind of statistically how January starts to look. So here's where I think things are going to get real confusing for buyers right now. So these are the headlines people are reading in real time. How house prices are falling throughout Texas. Falling is a present tense word, but really house prices fell in 2023 throughout Texas, and that's true. They're looking at the data. This is all from last year. That's 100% true. We had rising interest rates and home values fell. Austin, among the metros with the U.S. with the steepest rent declines, also true. Okay, so this is again 2023 data. We had a lot of apartments come online, brand new apartments. They're vacant. You got to fill them all up. It spreads out. It creates more supply and it spreads those renters out, and that lowers rents. Most of the steep declines were in the apartment sector. I would say duplexes, single families were more kind of flat to mildly down, but they were more on that flat level. However, you're reading the article right now. So some buyers are going to read these and say, hey, the market's really slow. I want to go steal a deal. Okay. But that's not where we are in real time. So if I go back here, this is from the Mortgage Bankers Association. Is the market bouncing back? Okay. So this is looking at 2024 data. There's been an increase in mortgage applications. And yes, this is nationally. But as of mid-January, applications were up 3.7%. They're seeing a big bounce in conventional and FHA purchase applications. Some buyers are moving to act early this season. Pending home sales increasing. So they were talking about December and January. And so they saw an 8.3% increase in December, and they're projecting a 13% NAR, projecting a 13% surge in existing home sales this year, and an even bigger bounce next year. And so they're saying that the market is already starting to show signs that it's picking up steam. So as I come over here, here's kind of one of the reasons. Obviously, we have had affordability issues. The pandemic really drove up the price. Obviously, if you look at 2019 to 2023 in any of these metros, these are kind of the hot markets through the pandemic. Denver, Vegas, Austin, Dallas, Jacksonville, they were all less expensive in 2019 than 2023. And that's part of where we saw housing declines come in. But what's happening is when you combine the story that we are having lowering interest rates over the course of 2024 and you have lower prices that we've had for the last 18 months, and then you tack on pent-up buyer demand, we are seeing a surge in buyer activity. So I want to go back to, let's see, this chart here. So let me tell you what's happening in the market right now. So especially in the last 3 or 4 weeks after New Year's, a lot of buyers come into the market. They get pre-qualified. They're interested to buy a home in 2024. What we are seeing is with new listings in popular or trendy areas that are in good condition and are priced well, right? So you got to meet those factors in any market. Man, those are getting a ton of activity. We have a listing that we put on the market last week. We are in a very popular neighborhood in Round Rock. It's a master plan community. We were the only house on the market in that neighborhood last weekend. We had 10 offers in the first weekend. We just accepted a buyer last night. We had an open house on Saturday. I think I had the most traffic I've had at an open house in my career. I believe we had over 100 people come to that open house. Okay, so that's an example of what we're seeing on new listings that are in great condition, good locations. We have other listings that we have had on the market since 2023. These are properties that listed last year and they're still trying to sell. We're not seeing that kind of activity. We're seeing maybe a little bit of pickup in activity, but they've been on the market a long time, right? And so the wave of buyer activity is not hitting those homes yet. It may, but it's not hitting those homes yet. I also think if you have a resale property and you are in the suburbs where you're competing against a lot of new home construction, the builders are still offering pretty hefty incentives, lower interest rates or closing cost credits to help buyers, come to the table with less money. If you are having to compete against home builders, you also are going to have a much harder time selling your home. So for now, there's two markets setting up in Austin. Okay. One market is still going to be a bit slow. It's going to be the homes from 2023. It's going to be homes that have to compete against new construction, maybe homes that aren't in great condition. Those homes are still going to have a bit of a challenge currently. It could change as this buyer activity picks up. If you are a new listing, you're a 2024 listing, you're in good condition, you're in a good location that people want to be in, I would not be shocked if you're going to see a swell of buyer demand pour into those homes over the next several weeks or months. We're going to have to watch how inventory picks up because that's going to really drive how much traffic comes into these properties. But those are two different markets. So if you're a buyer right now, we want to look at mortgage rates. So right now, mortgage rates are not really that great. They're not coming. They came down from October from 8 to 7. But right now we're about 6.9. There is pressure in the bond market today that most likely is going to drive it up higher. I would not be surprised if we see this week mortgage rates go back up to 7%. So today in February, we're not really yet feeling this big downpull in mortgage rates. And so I do think, though, the mentality of buyers, knowing that rates will come down over the course of the year is enough. And it's fueling people to get off the sidelines and get out there to buy homes. So if you're a buyer right now, you need to really work hard with your lender, get pre-approved. And here's why. Some houses, you may have an opportunity that it's still a bit of a buyer's market. You may get to talk with a seller. They've been on the market a while. They may or may not be getting as much showings or activity. They may not have an offer in hand, and you may have an opportunity to negotiate. You might even be able to get some money from that seller to help you with an interest rate buy down program. So on one side of the market, you may still feel like it's a bit of a buyer's market. On the other side, you may go look at a brand new listing, and before you even blink, it's got 4 offers and you've got to compete for that house. And now all of a sudden it's a seller's market, and you need to understand, hey, how much buying power do I have? Do I have the ability to waive the appraisal contingency? In other words, if it doesn't appraise for the value that I bid on my property, can I make up the difference? Do I have enough money to make up the difference? So it's going to be a weird market. Buyers are going to have to wear both hats. With sellers, I think it's very important that you talk, obviously, with us and with, let's get the data in the market, because it is shifting. And we want to be prepared for making sure. We need to know which kind of market you're going to be competing in. I don't think all sellers are going to feel the same right now until the 2023 stuff kind of works its way out and we see what kind of supply we're going to get in the spring. Right now it's a great market. We'll see if that continues as we get into the spring. I do think rates are going to stay at this kind of 6.5 to maybe 7.25 range, and they're going to be a bit volatile until we know the Fed's going to cut a rate. I don't see that happening until maybe May or this summer. So pay attention to that. There are a lot of moving parts. Finally, want to leave you with one more bit of data. This is in the city limits of Austin. Today is February 5th. So we had talked about this before. Austin passed what's called the Home Initiative. That rolls out today, which means today is the first day that people can submit a permit to try and develop a property based on these new rules. So what are those rules? The changes are about single family zoned properties, SF 1, 2, and 3 in the city limits of Austin. Typically, you were only ever able to build a single family house, no ADUs, no conversions, stuff like that. The changes include permitting up to 3 housing units on a single family zone property, the inclusion of tiny homes, and the removal of restrictions that stated how many number of unrelated adults could live in that property. In other words, now more people that aren't related could theoretically now live on that lot or in the properties that you have on that lot. There's been a lot of pushback on this as well from neighborhood associations and fear of short-term rentals and all kinds of stuff. So it is early days. I would not be buying a property today, assuming you're going to be able to do this. I think we are at the front end of this. I want to see how the city adopts these permits. I want to see how developers are able to successfully initiate some of these changes. But if you are owning a property or buying a single family property in the city limits of Austin, pay attention to this, because I think over the course of the year, we could see some big changes that would allow you as an owner or an investor to do more with that property than you ever have been able to do before. So the Home Initiative, pay attention to that as well. All right, man, there is a lot going on. It is an interesting market. We've got a hot market in some pockets. We've still got a cool market in some pockets. It's definitely shifting, though. So if you know someone looking to buy, sell, or invest in Austin, please have them reach out to us. We'd love to talk about this in more detail. Of course, you can follow all of our videos on YouTube at Ryan Kelly Group. Make sure to hit that subscribe button, and you can make sure to follow us in real time. Otherwise, hey, the market is picking up steam. We're going to see how that plays out over the coming weeks. I'll keep you updated each and every week. Until then, enjoy mid-February, and we'll talk to you next Monday. Thanks.